Welcome to Drill Down Earnings. We have quarterly results out from Applied Optoelectronics. I've been practicing saying that because I think it's one of the 50 most important companies in technology. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, and that's what I look at. The stock stories, the business stories behind these stocks that I move. This stock has certainly moved a lot. Applied Optoelectronics, the stock that I own. I'm very biased here. You don't have to believe anything I say. I'm not trying to get you to buy or sell the stock. This is not investment advice of any kind, but I just want you to know that my bias is out there. The company did a little bit better than Wall Street estimates in terms of revenue. This is a smaller company, had 105.8, so the expectations 105.8. They did 103 million in revenues. So they missed on revenues. They missed on earnings per share a little bit. But let's dig a little bit deeper. So $103 million in earnings, so kind of right in line. That represents 138% year-over-year growth. So fantastic growth for this business. What grows that fast at 138%? Very few things. But the reason I bought the stock was because it's a company that makes the devices that go into data centers to power the growth of data centers and AI. And that's kind of the hope for this business, and the dramatic growth is part of that. But it's a lot more interesting than that, and not everything's turning out as I had hoped and planned. Their losses are also improving. They're down to, they talk about an adjusted non-GAAP profitability, gross margins. I hate those numbers from any company. They lost money, but they lost at only a negative 6%, if you will, operating margin. So that's better than it has been, improving losses, if that is such a thing. What's going on, let's talk about data center first, because that's the thing I'm most excited about. The data center business, where we're using the technologies once used for long distance communications, cable TV, optical electronics, lasers that shoot colored beams through fiber optics. We're going from a transition from 400 gig to 800 gig to maybe someday 1600 gig. Those things are all happening here right now. So they have one big hyperscaler that is using their 400 gig stuff that might want to use their 800 gig stuff. And they have become qualified or customer approved, the factory that they're building, but not yet fully qualified for those meaningful shipments to happen. Yet they say those will happen in the second half of 2025, that factory being in Taiwan. Their data center segment, therefore, growing at only 30% year over year, 40% sequentially to $44.8 million, I should say. Most of that in the 100 gig, 25% year-over-year growth, and in 400 gig at 43% growth. So these are single mode transceivers, and their first shipments in volume of the 400G to a new hyperscale customer, something we boasted out in the phone call here, in the conference call. So hyperscalers are spending. 30% growth on a year-over-year basis in data center is good. Maybe not the fantastic growth that we were seeing over 100% last quarter, and not what I signed up for. What I signed up for, however, and here it comes, cable? Yeah, cable TV spending. It is $56,019,000 in revenues from their cable TV division in this quarter. That business is up over 800%. Just an amazing quarter. Charter is buying their 1.8 gigahertz amplifiers, and they've completed their testing and certification and they've said 6 other cable operators are either qualifying or in early development already. So while it's bumpy and not as expected, data centers growing, cable's growing, cable and data center both expanding for this company, and they're building out capacity, they're building out factories. They took a really big investment from Amazon 6 months ago or so, both to build out their factories. They also gave Amazon some warrants, so Amazon has vested interest in seeing these guys succeed, and they took a bet on AAOI, as did I, before Amazon got involved. But AAOI or AOI as they call themselves, Applied Optoelectronics, is actually easier to say than AAOI. Go figure. It remains on track to exit 2025 with, they say, greater than 100,000 units per month of 800 gigahertz transceiver capacity, but they're not there yet. And they've also started a Texas facility expansion, or they say that will begin production late this summer. A lot of skepticism out there, a lot of smart short sellers out there saying that I'm wrong and they're right, that this is not going to get on track and that the data center business is not doing well. When these numbers came out on after hours trading, the stock was down 7%. Not good, but it is up 232% in the last year. So, not for nothing, so you say in Brooklyn. The CFO and Chief Strategy Officer, Stefan Murry, was here in San Francisco, actually, at the Optical Fiber Communications, the OFC conference. I saw him speak, and he talked about kind of deadlines they're shooting for the qualification of their factory in Texas. domestic production of these devices are so important because most of this stuff is made all over outside of the US. And so the notion that hyperscalers who are making commitments to the White House to build data centers and buy from manufacturers in the US are looking at companies like Coherent, another stock that I own. And I don't know many stocks, but I happen to own both Coherent and AAOI because I think that this optical networking thing is something that looks really interesting and might have some success here. We heard about Coherent yesterday from Apple and from the White House. And indeed, Applied Optoelectronics also trying to get these factories qualified in Texas, in addition to Taiwan. Here's what they had to say.
So 400G is already qualified. We talked about the first volume shipments occurring this quarter. That means last quarter, the quarter that we're reporting on Q2. So that's already happened. 800 gig, there's really not much that has to happen, but as we discussed in our prepared remarks, we have to have production capacity available for 800G, meaningful production capacity available for 800G before there's any need for them to give us the green light to go ahead and produce. We're pretty close to that right now. We outlined our targets at OFC, and we're sticking to that. We're tracking pretty well to those targets. So really, what has to happen is we've got to have enough production capacity to be able to accept meaningful orders for them to finish the qualification.
So this cake is not fully baked yet. 800G qualification has to happen. This factory in Texas has really got to get going here. And while they'll be able to use the same capacities for the same factory lines for their 1.6 gigahertz production, it's not there yet. So we're looking at it. So what do you want to remember about all this? I thrown out a lot of names and numbers. And what's the one number that tells us a whole lot? Well, I've got that. So Applied Optoelectronics Q2 earnings so important for a stock that has risen 232% in the last year, yet was down when the numbers came out. And importantly, a stock, remember, that I own. So this is not investment advice. Just recognize that I might have some bias here that I can't even sort out. But the revenues for this company up 138% on a year-over-year basis. And I promised you to bite the one number that tells you a whole lot. That number is 863%. Their cable TV business, not the data center business that I was so excited about, but their cable TV business up 863% on a year-over-year basis. Data center did fine at 30%. But 863% is really all boats rising with the tide at Applied Optoelectronics. Please subscribe to these channels. We really need your support. Check us out at Cory TV and, of course, at Drill Down Pod on TikTok, Instagram, and on YouTube.